Okay, good morning to all. So we discuss last some of the videos related to XNR chart and EOQ, and at the same time NPV and some other topics. And now we will move to the topic of accounting. First of all, what is history of accounting? In history of accounting point of view, most of the people have very little idea about accounting is our Indian base accounting. Most of the people are thinking it is a modern form, ira lucy pacialo. Actually, Indian accounting is a traditional accounting system, and we call it as the name Nama accounting system. So these particular Nama accounting system introduced by Kautilya in 8th century. Kautilya wrote a book. The book name was Arthashastra. These particular Arthashastra means economics and accounting. So these economics, these economics also, now we are thinking this Italian word oikos and nomos. Oikos and nomos. That means economics is home based, individual, our mothers are doing. So every place doing. Now we concentrate on accounts only here. So in modern point of view, now whatever we are using this particular accounting system with the help of Ira Lucy Paciello. He was an Italian monk and he introduced this concept double entry system. Actually, the book name was he wrote a book. The book name was Decomputing Scriptures. Lucy Paciello was a famous Italian monk and is a mathematician and statistician also. He introduced the two words debito and credito. Debito and credito. Here you observe every receiver is giver and every giver is receiver. So this is a dual aspect concept. These concept introduced by Lucy Paciello. And general point of view, even though the people having no idea about what is debit, what is credit, but they know this terminology. In bank, we deposit cash. We deposit cash. What happened? Our account was credited. Our account was credited. So in bank, if you withdraw cash, what happened? Your account was debited. Your account was debited. So that means you understand what is debit and what is credit. Now we go through the golden rules of accounting in bookish terminology, how to learn the accounting concepts. Okay, so those are personal account, real account, and nominal account. Just for understanding purpose, we have taken these all this, but you know very well how to understand what is credit, what is debit. If you deposit, it was credit. If you withdraw, it was debit. So these base, we are dividing the transactions of entries. First of all, before going to transaction of entries, we are moving to the rules of accounts. Those rules of accounts are personal account, real account, and nominal account. First one, personal account. Our own transactions, our company transactions. Because a company is an artificial person. Here, person is there. So the rule is debit the receiver and credit the giver. Debit the receiver and credit the giver. Examples here, the persons are there: Ram, Gopal, any one name you can take, and SBI, okay, LIC, or you take BHEL, or you take Reliance, whatever the name, because the company is an artificial person, that's why we're taking personal account rules. And next one, real account. So already I told you these are the common elements, but these common elements I am dividing into three. Okay, so these are the compulsory rules. Real account, debit what comes in, credit what goes out. Okay, why I am telling all these three accounts, you can understand later. Real account, debit what comes in, credit what goes out. If you purchase mobile, okay, if you purchase mobile was coming to you and cash was going out, credit what goes out. So your cash should be going out and money was coming in. So example, all assets are debited, all liabilities are credited. Okay, that means cash, bank, bills receivable. Okay, all these are assets. Okay, and liabilities, creditors, bills payable. Okay, bank overdraft, all these are your liabilities. In detail we will discuss these concepts later. Just for your understanding purpose, stick on here. Nominal account, debit all expenses and losses, credit all incomes and gains. So whatever you spare expenditures for regular every day, okay, That expenditure is debit all expenses and losses and credit all incomes and gains. Purchases. Every day you are purchasing something, a bus ticket or your movie ticket or your tiffin purpose, you are taking a token, whatever, all these are debit all expenses and losses. Okay, and credit all incomes and gains. Whatever you're getting revenue or income or whatever it may be, that should be considered you posted in credit side, credit all incomes and gains. Okay, now we will continue the topic. Just now we discuss the rules of accounting. So, okay, now we continue the after rules of accounts. Now we move to the accounting. What is accounting? So just now we discussed the history of accounting and rules of accounting. Now move to the what is accounting? Okay, so many meanings are there, many definitions are there. For your understanding purpose, I am sticking with simple meaning and definition. Accounting, it is a language of business. Accounting is an art of recording, classifying, summarizing. Okay, so this is summarizing, analyzing, and interpreting. So the summarizing is so first one, recording is journal. Every day you are posting some of the entries. Okay, day to day transaction you are operating here. So recording is day to day operation purpose. We are posting the journal entries. And second case is classifying. Accounting is an art of classifying. It is taken. The account is a ledger. So ledger means dividing the transactions. Whatever we are taken regular day-to-day transactions, here we are dividing those particular transactions into accounts. Okay. And next one, summarizing. The summarizing, accounting is an art of recording, classifying, summarizing. The third step, summarizing means after completion of these particular ledger accounts, we are taken the closing balances. Those closing balances are open up in trial balance account. After completion of the trial balance and we are finalized the transactions of debit side and credit side total amounts, and we are moving to analyzing part. Those analyzing part, we are dividing those elements, trading and profit and loss account and balance sheet. What is trading account? What is the use of trading account? To know the gross profit. To know the gross profit. To know the gross profit. What is gross profit? So gross profit is equal to what? Cost of goods sold. Cost of goods sold minus net profit. What is cost of goods sold? You know, cost of production, everybody know. Cost of production, one product cost, you know very well. So cost of production we know very well. But what is cost of goods sold? Cost of goods sold is CGS. I am taking a simple understanding purpose. With the C, cost of goods sold means CGS. So here opening stock, cost of goods sold formula is opening stock plus purchases plus direct expenses minus closing stock. Okay, that is cost of goods sold. And you know net profit. So net profit, you know very well, cost of goods sold minus net profit. Sorry, it is not net profit. So it is net sales. Cost of goods sold minus net sales. Gross profit is equal to cost of goods sold minus net sales. Here net sales is equal to sales minus sales returns. Okay, so a small correction, cost of goods sold minus net sales, not net profit. And moving to the net profit. Net profit, you know, simple understanding for not taking off all these definitions and meanings. Gross profit is your gross salary you taken, and net profit is your net salary after deductions. Okay, your trading account, your expenditure point of view, manufacturing concern point of view, you taken, and profit and loss account is taking of sales, administrative expenditures, all these things. Okay, you can learn all these things in coming sessions. And now we move to the balance sheet. What is balance sheet? To know financial or individual position purpose, we are taken these particular balance sheet. If it is a company, we are taking financial position. If it is an individual, you know the individual financial position. Okay, so it is a accounting definition or meaning. Accounting is an art of recording, classifying, summarizing, analyzing, and interpreting the results. Our accounting is the language of business. This way you can learn what is accounting. Okay. And next case that is generally accepted accounting principles. So we have many concepts and conventions are there. So the first concept and convention, just before a few minutes back, we are discussing accounting principles. Those are rules of accounting. Rules are personal account, real account, and nominal account. So here those particular rules coming where? With the help of generally accepted accounting principles. These rules are applied to universal. These rules are applied to not only India. It is applied to all over the world. So those rules are here I am mentioning with the help of general accepted accounting principles, concepts, and conventions. The first one is business entity. So here business entity means the business is different, the person is different. So even though you are owner, you are a different, company is different. Company is an artificial person. The business is distinct from the person who own it. That is business entity concept. And second one, dual aspect concept. Every receiver is giver and every giver is a receiver. That is dual aspect concept. And the third one, money measurement. You can measure money in terms of kilograms or quintals or liters. No, you can measure money in terms of the standard currency. So India rupee, UK dollar, UK sterling pound, US dollar. Okay, like that depends upon the standard currency we are measuring money. And accounting period, when you start accounting 1st April to 31st March. And what is cost concept? Cost or market price, whichever is lower, you know that particular cost concept. Accrual concept is to know the financial position, to know the individual financial position and income position purpose we are using accrual concept. And matching concept to know the expenditures. What type of expenditure? Revenue expenditures. To know the revenue expenditure purpose we are using matching concept. Actually the expenditures are three types. One is capital expenditure, second one revenue, third one deferred revenue expenditure. Capital expenditure is machine cost purpose we are using capital expenditure. Revenue expenditure is like discounts, coupons, and all these are revenue expenditure. Deferred revenue expenditure, advertisement. And historical record concept. Our politicians are filing their asset details. It is not void, it is not illegal, it is legal because they are mentioning their asset value in 1980s or 1990s. On that time, their asset value is 30 lakhs. Right now, the asset value may be 300 crores. It is a historical record concept. And next, coming to the conventions. What is convention? Convention, in the sense, it is the customs, traditions, and beliefs. Concepts are rule based. Conventions are customs, traditions, and customs and traditions and rules and beliefs based. So these conventions are, the first case is full disclosure concept. How to file the returns, or how to start accounting, how to end accounting. Accounting start where? You start from journal, ledger, trial balance, final accounts. It ending with the final account. Starting from journal, ending to final account. That is full disclosure concept. And consistency. Whatever you are choosing methodology in this particular accounting, you follow that particular methodology only. Example, you take a depreciation. In depreciation, many methods are there like written down value method and simple average method. Okay, and we have sinking fund method, annuity method. So many methods are there. You should use one method for remaining years also, not for different methods you should not use. And materiality concept. So this is a big concept, but I am trying to give a small giving a small synopsis regarding for the accounting concepts and conventions and total accounting area with the footnotes. So likewise, materiality concept also taking consideration of trade related activities and commercial related activities as the footnotes, that is materiality. And conservatism, future is uncertain. So that's why the companies are preserving, companies are reserve some amount, that is a reserve for bad dates, reserve for doubtful dates, okay, or it is taking of contingent asset or contingent liability or whatever it may be, this is taking of conservatism because future is uncertain, we are facing so many problems, okay. So that's why you're taking conservatism concept. Okay, after learning of the concepts and conventions, now we move to accounting entries, how to write entries. Take some entries, how to write. First of all, what is entry? Entry is nothing but entry is equal to event plus transaction. Event means task. Ram purchased mobile, that is event. Transaction means money. So you just involve Ram purchased mobile 10,000 rupees. Likewise, you can easily understand entries taking some examples, and these are the main points, key role points of how to write entries. So many non BCom students, so many art students are struggling, and at the same time engineering students, those who are wanted to learn accounting, it is difficult. That's why I am just quoting the some of the entries here. Purchased machinery, sold goods to Ram, cash deposit to bank, cash paid or withdraw from bank, commenced business with cash, purchased goods on credit, that is the furniture purchased from Murali on credit. Now one by one we learn those particular entries. So first one, purchased machinery. Here you observe what you purchase here, machinery. As I said earlier, the nominal account rule, debit all expenses and losses, credit all incomes and gains. All expenses, machinery is an expenditure, and machinery is debit what comes in, cash is debit what goes out. It is real account rule also. Machinery account, cash account, these are real accounts because they all both are assets. One asset is coming, one asset is going out. Debit what comes in, credit what goes out. Purchase machinery, simple understanding. Machinery was coming, cash was going out. Okay, what is coming, you should debit it. What is going, we should credit it. So in below you note down this some narration being machinery was purchased. Okay, this way you can understand purchased machinery. And next, sold goods to Ram. Sold goods to Ram or Gopal, whoever it may be. So we are selling some goods to some person. That means we are getting some money. Okay, so who is receiver here? Ram is receiver, and you are giving here, not mentioning any name. So Ram account debit to sales account. So it is a rule, Ram is the personal account, sales is the nominal account. Okay, next, the next third case is cash deposited into bank. If you deposit cash into bank, who is receiving that particular cash? Bank is receiving cash. That's why bank was debited, bank account debit to cash account. We are giving cash. Okay, so the entry is bank account debit to cash account. So narration being deposited cash in bank. Same likewise, withdraw or paid, cash paid or withdraw from bank. It's a ulta entry. You can simply understand cash account debit to bank account because cash is going out. Okay, cash is going out. So here cash is receiving you, and bank cash is going out. It was coming to your hand. Okay, if you withdraw money from ATM, your account was debited, and you are taken cash, you are receiving cash. That's why cash account debit to bank account. Who is giving that money? Bank is giving that money. Or in this particular case, salaries paid is there, salary account debit to cash. Wages paid is there, wages account debit to cash. Electricity paid is there, electricity account debit to cash. Likewise, you can write very simple. And the last transactions, last two transactions, that is commenced business with cash. Any type of this particular transaction is coming. Business started with cash or commenced with cash, whatever. So what we are investing here, we are investing capital. That means we are giving capital. So, and we are taking money. So I already told you business entity concept. If you start business, you are different and company is different. The business is distinct from the person who own it. That's why, so cash account debit to capital account. So many people are misunderstand. Capital is a liability. That's why capital is under the real account, but it is wrong. Capital is personal account because who invests that particular capital? Persons are invested. That's why it is a personal account. Cash account debit to capital account. So the narration is being started business with cash. Okay. So next, last transaction, purchased goods on credit. Purchased goods on credit. I clearly give the explanation here. Furniture purchased from Murali on credit or purchased goods from Murali on credit. Like that, they are asking the event plus transaction. So you can note down like this: furniture account debit to Murali account. Why? Because if it was furniture purchase, you write the entry is furniture account debit to cash account. Furniture was coming, cash was going out. But here the Murali is taken. Murali is giving that particular furniture with credit basis. Okay, so that means who is giving here? Murali is giving. Furniture account debit to Murali account, being furniture purchased on credit. Likewise, if you write this particular narration. And finally, how to write journal format. So all these particular entries and events, like you should note in real time. So date, particulars, ledger folio, debit amount, credit amount. So you should mention date and the entry like this. You note down furniture account debit to Murali and amounts. Like this you can understand. Okay, right.